Tesla just held what might be one of the most pivotal earnings calls in its entire history. They laid out a future that looks, well, radically different from its past. And they are betting the company, we're talking over $20 billion, on a future driven by autonomy and robotics. So let's break down exactly what this means, because for any investor, you have to understand this shift. It's absolutely critical. Right out of the gate, the call started with a bombshell. Elon Musk announced that Tesla is ending production of the very cars that put them on the map, the Model S and the Model X. I mean, these weren't just cars, they were the symbols of the whole premium EV revolution. And now, they're being given an honorable discharge. That one decision tells you a massive pivot is underway.
So the first thing on every investor's mind is why? Why on earth would you do this? Killing your flagship products isn't just a minor tweak, it's like tearing up your business plan and starting over. To really get this, we have to look at the foundation it's all built on, the company's current financial health. Is this a confident leap forward or a desperate gamble? Okay, so let's dig into the numbers from their Q4 2025 report. Are they making this huge move from a position of strength or weakness? The results were, well, it's a little bit of a mixed bag. So on the plus side, automotive margins, and this is without those volatile regulatory credits, actually improved to 17.9%. Now here's why that matters. It means the core business of just building and selling cars became more profitable. That's a fundamentally healthy sign.
And hey, it's not just about cars anymore, right? The energy division is becoming an absolute beast, pulling in a record-breaking $12.8 billion for the year. This isn't some little side hustle. It's proof of serious growth in a completely different business, and that's a huge piece of the bull case for the company. You put it all together, and the company's total gross margin hit over 20%, which is its highest level in more than 2 years. So, on the surface, the underlying profitability looks pretty solid, but that's not the whole story.
As any savvy investor knows, you have to look at the headwinds. And there were definitely a few. Their net income took a hit because their Bitcoin holdings dropped in value. Operating expenses jumped by $500 million. The margin on their services business actually declined. And here's a big one. Shifting full self-driving to a subscription model is expected to pressure margins in the short term. The point is, while there are strengths, there are also real pressures that make this pivot they're about to do even more audacious.
So, with that financial picture in our heads, let's get to the main event, the new blueprint. Part 1 of this vision is the autonomy revolution. And this is the real reason the Model S and X are being retired.
Meet the Cybercab. And let's be clear, this is not just a car without a driver, it's a completely new kind of vehicle. It's a two-seater, built from the ground up for one purpose and one purpose only, to operate as a transportation service. No steering wheel, no pedals. Tesla doesn't see this as an evolution of the car, they see it as the car's replacement for most trips.
And the scale they're talking about here is just staggering. Musk said that he expects Tesla to eventually make several times more Cybercabs per year than all of their other vehicle models combined. Just think about that for a second. This one product is designed to dwarf everything that came before it. The focus is shifting from selling cars to people to selling transportation as a service. And, they aren't starting from scratch on the software side of things. They already have nearly 1.1 million paid full self-driving customers out there. That existing fleet isn't just a revenue stream, it's a massive data gathering engine providing a huge head start as they dive into this new world. But the vision doesn't stop with autonomous cars. Not even close. The second pillar of this new blueprint is something straight out of science fiction, the mass production of the Optimus humanoid robot. So, what are they doing with the factory space from the old Model S and X lines? They're converting it into a factory to build Optimus robots, with a stated goal of producing 1 million units a year. This isn't some side project. It's a core manufacturing priority, literally replacing their flagship car production line.
But here's the reality check, and it's straight from Musk himself. Building something entirely new with a brand new supply chain is incredibly difficult. The production ramp-up will be at the mercy of the least lucky part. For an investor, this quote is a perfect summary of the immense execution risk involved here.
So a future of autonomous taxis and humanoid robots sounds pretty incredible. But what does it cost to build that future? Well, this is where the strategy transforms into a massive, high-stakes bet. Just look at this jump. Capital expenditure, that's the money they spend on factories and equipment, was around $9 billion in 2025.
For 2026, they're forecasting more than $20 billion. That is a colossal increase in spending, and it fundamentally changes the entire financial profile of the company. So where is all that money going? It's being poured into building this new vision. We're talking 6 new factories, including facilities for the Cybercab and Optimus, a massive expansion of their AI computing infrastructure, growing the actual fleets of robotaxis and robots, and they're still investing in their existing car factories. This is the price tag for what Musk calls a future of amazing abundance.
And get this, that $20 billion figure doesn't even include the biggest long-term project. Musk identified a future bottleneck in the supply of AI chips, especially given all the geopolitical risks out there. The proposed solution? A terafab, a massive in-house semiconductor factory in the US. It's a plan to de-risk the future, but it represents another layer of colossal investment and complexity.
Okay, let's bring this all together. What does this all mean for an investor looking at Tesla today? Well, it presents a classic high-stakes dilemma. On one hand, you've got the bull case. You're betting on this incredible vision where Tesla becomes the undisputed leader in autonomy and robotics, dominating the new market of transportation as a service and unlocking what they call amazing abundance. Then you have the bear case, which is just as stark. You're looking at staggering execution and supply chain risks, guaranteed short-term margin pressure, and a colossal capital spend, all while navigating a really uncertain geopolitical landscape. You know, maybe the CFO Vaibhav Taneja put it best. This isn't just the next chapter for Tesla. He said they are starting a new book. And that 2026 is page 1. This frames the entire shift not as an evolution, but as a complete restart.
Which leaves us with the ultimate question for any investor. Is this new book a story about achieving amazing abundance and reshaping the world? Or is it simply a bet that's too big, with risks that outweigh even the most spectacular of visions? That, right there, is the $20 billion question you have to answer.